Okay, so this is my fifth trade. Now, after those trades that we saw, what did I actually look at? I look at this particular demand zone. This is a demand zone here. And when I saw this demand zone, what happened? I marked my demand zone, kept my sell limit. For this one, I kept my sell limit. Now, I will tell you why I actually kept sell limit on this particular trade. I'm going to give you an instance why I kept a sell limit on this particular trade. Okay, so after drawing our order block here, what are we expecting? Like I said the other time, I always look at consolidation before my point of interest. Consolidation before my point of interest. So now, if you look at this particular zone here, this is full of consolidation. This is the 15 minutes time frame. Don't forget, this is the 15 minutes time frame. But if you look at this, it's full of consolidation. Now look at the 15 minutes time frame candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. That's 20 15 minutes candle before it got to my point of interest. So irrespective, why I actually kept a sell limit on this one is because of this consolidation. It took a lot of time before it gets to this point of interest. So irrespective, what did I expect? I knew that the moment this candle gets to this particular point of interest, it's going to actually displace with speed. It's going to have a big displacement. So irrespective, I kept my sell limit, and the moment the market came, it tapped me in. After tapping me in, immediately we saw a huge rejection. That rejection now resulted to a TP of 4:5, 4:1 RR. Let's just say 5:1 RR because it's because of this particular type. It's because of this my stop loss. So let's say it's 5:1 RR. So that's how I actually cut this trade. So let me not skip the rules. Firstly, break of structure. This is our break of structure here. Order block. This is our order block here. Where is our inducement? Where would you call an inducement here? The first pullback. Don't forget, inducement is the first pullback. Inducement is the first pullback after an order block is created. So now, where would I call my inducement here? I can call this an inducement. I can also call this an inducement. I can also call this an inducement. But irrespective, if I call this one an inducement, this particular candle wicks have taken out this particular inducement. If I call this particular one inducement, there is no candle that has taken it out. But what did the market actually do immediately? After taking out all those liquidity, what did it do? We call all these places liquidity. All these places, they are all liquidity. After taking out this liquidity, tested the order block, it came down with big momentum. So that is how I actually also cut this trade. So that is, let's count our rules again: break of structure, order block, inducement, and our entry. So this is another trade that we cut. And irrespective, after catching this trade, it respected this zone and also went to the top. I also respect this zone. So that is it for the fifth trade. And this sixth trade, yeah. So I think this is on the 5 minutes time frame. And we are going to see how this is the 5 minutes time frame. I knew that I caught this market on the 5 minutes time frame. Knew it was on the 5 minutes time frame. So this is the trade I just explained that had a lot of consolidation to the point of interest. Can you see how the candle printed? Tapped in, rejection, straight haggard, impulsive movement with a good rejection, rejected, and boom, TP, straight to TP. So this is the next one we are actually analyzing. This This is a sweet trade. This is a sweet position. Okay, so now I would actually also be explaining this, and firstly, let's start with our breakout structure. Let's start with our breakout structure. Firstly, I will say this is my breakout structure here. I'll put my breakout structure here because this is the structure that was broken after this demand zone. This particular demand zone was created. After this particular demand zone was created, after this other block was created, this is the zone that was broken. And so this is a breakout structure. That's our number one rule. Second rule is our order block. Can you see our order block? This is our order block. That is the candle that actually created these whole cells. The candle that created these whole cells. So what am I expecting on this particular candle again? So after breakout structure, after order block, what are we looking at next? Inducement. So in this case, I'm not going to be looking for inducement. I saw two equal highs. And now, if you have idea of smart money concepts, equal highs are A plus setups. Equal highs are A plus setups. That is where I go full margin. For me, that is where I go full margin. So that particular day when I saw this particular equal highs, can you see the market came, pulled back immediately, but did not mitigate our order block. What did I do? What did I expect? I expected the market to also still continue consolidating outside my point of interest. What happened? It still came in again with good momentum. Still came to my to this particular zone. Rejected again. So now, if this equal highs, you can't call it inducement, then that means that my inducement, this is my inducement here. This is my inducement here, this particular candle here. Let me leave this equal highs. I'll call this my inducement. I'll call it this my liquidity, my inducement. So irrespective, the moment the market came, we wanted to tap into the inducement, but irrespective, the moment it didn't tap into this inducement, I knew it was an equal high. I knew it was an A plus setup. I knew this was an A plus setup. So irrespective what happened, the moment it rejected out of the equal highs, it moved impulsively into my order block. And this is my rules again out of this order block. Normally, this particular order block, I was supposed to put my entry at the top of this particular order block so that it will be a liquidity sweep outside my point of interest. Liquidity sweep outside my point of interest. But irrespective, I didn't see consolidation. I always say my rules. If you follow your rules in forex, there is no how you're going to be losing consistently. Make sure you always follow your rules. So irrespective, when I saw the impulsive move into the particular point of interest, what did I do? I knew I can't use sell limit here because I didn't see enough consolidation. I only saw enough displacement. This is a displacement. Sorry. This is a displacement. This is a displacement. Another displacement. No consolidation. Another displacement. No consolidation. Another displacement. Can you see? Another displacement. This is not consolidation. Consolidation is something that actually happens within. Like this other one now that happened. This particular other one now. This is what you call consolidation. This is consolidation. These ones are all displacements. They are all displacing out of those zones, creating liquidity around my point of interest. So irrespective, these two equal highs are my liquidity. And the moment the market tapped into my order block, I didn't enter immediately. I waited for this first rejection. The second rejection came, tapped into my swept my liquidity outside my point of interest. The third candle also came, swept the liquidity outside my point of interest. So this third candle is what gave me my confirmation. This third candle, I was expecting it to make sure that the body candle close inside the candle closes inside the body candle. So irrespective, the moment this body candle close and the moment this third candle close, sorry, let me bring it out. you have to make sure you have a good confirmation. So irrespective, after the sweep here, this third candle here, this green candle, I expected it to also sweep, but the closure of the candle should be around the body of this particular candle. So my confirmation is closure of this particular candle inside the body of this candle. So the moment I saw that the market actually closed inside the body of the candle and it also closed outside my order block, I entered the market immediately. I entered on this particular candle, and irrespective, the market actually respected our order block, and irrespective, we actually rallied this trade from this particular zone here to this zone, and it gave us a 4:1 RR. 4:1 RR. So on the next trade, I actually saw a nice setup. This is my OCL. I know some people would not understand what OCL is, but this is my OCL. That's my open and close candle, and this is my liquidity here. Can you see my liquidity? I expected that this liquidity is going to draw the market to this particular zone, but irrespective of what happened, it actually did draw it into the zone, but it took me out immediately. Irrespective, I didn't enter the market because I didn't use sell limit here. I didn't enter the market, but irrespective, the moment I see that the market did not respect this liquidity and it broke past this particular zone, I knew that market was not going to hold. So irrespective, I didn't take this trade.